What's going on, Moon Gang? I hope that you're having a good one. I'm here to give you the skinny on what in the world is going on with both AMC and GameStop. Now in this video, we do have quite a bit to cover. I want to shed some light on some new developments with prime brokerages. Remember, those are the people that facilitate the loaning and borrowing of shares, basically for hedge funds. We have to dive into some recent AMC FUD, and basically by the end of this, I want you to potentially understand that this might have been a big brain 4D chess move on Adam Aron's part. And of course, we'll be diving into the data and the trends so we understand how the shorts are currently positioning themselves and really what's going on. But before we hop into that, AMC closed out the day today, Thursday, June 3rd at 51.34, and GME closed out the day at 258.18. Alrighty, let's get into it. So right here, Jefferies, which is a prime brokerage, blocked short sells in GameStop, AMC, and Microvision. This was reported by Bloomberg. Jefferies told clients Wednesday, as in yesterday, its prime brokerage arm will no longer allow the execution of short sells in GameStop, AMC, and MBIS. Until further notice, Jefferies' prime brokerage will no longer offer custody on naked options in GME, AMC, and MBIS. I want you to know that I actually saw similar reports with other brokerages as well. This isn't specific just to Jefferies. But overall, Matt, why in the world are you bringing this up to us? Why is this important? Well, you kind of have to understand a little bit of the mechanics of how this goes on in the background. But basically, when someone is short, let's say a stock like GME, or let's say a stock like AMC, if it goes haywire, that's in a certain situation where if it goes bad, then the brokerage can be at risk because someone's going to have to pay that money. And that's why we see certain things like margin calls where like, hey, you're presenting too much risk to us. We need more money just in case it really goes haywire. So it's kind of interesting, but it's telling me that these prime brokerages, the people who facilitate the loaning and borrowing of shares for hedge funds, they don't even want to take on that risk. They don't even want to be in the scenario where a hedge fund could get so blown out of the water that they have to take on the risk if they can't cover the margin call. This is telling me that someone at Jefferies and other prime brokerages who are doing the same thing are so worried about GME and AMC going sky high that it's just literally not worth the risk for them to facilitate and collect some of that loan money. They just don't want to be involved with it. So right there, I feel like maybe I'm reading tea leaves or whatever's going on, but it seems like the writing is on the wall that even these guys are recognizing the danger of how high AMC and GME can go. Very, very interesting. All right, more specific to AMC. So early this morning, AMC kind of had a rough morning because there was more talk of share dilution. And on top of that, the common response to it was like, hang on, this is FUD. This already happened in April. And it actually did not happen in April. The thing people were citing in April was a prospectus that got built on today. I know that because here's the Form 8K that was followed by AMC itself. And then they filed it with the SEC right here. Here's the date, June 3rd. So here's actually what was going on. On June 3rd, 2021, AMC entered into an equity distribution agreement with B. Riley and Citigroup Global Markets to sell up to 11.55 million shares of stock through an at-the-market offering program. So you've probably heard this before because in the end of April, mid-May, they were talking about the at-the-market offering for AMC for 43 million shares to raise money to improve the fundamental basis of AMC. This was a whole new share dilution. There are now more shares in existence for AMC and they were raising money. This didn't happen in April, it happened today. So that was a hot topic and it probably had a lot to do with the gap down in AMC. And the whole time I was sitting there throughout the live stream today, the one thing I was trying to hammer home is at the end of April, GME did a similar thing. And when they announced that it was done, the stock shot up. When AMC did it in mid-May, same thing. When they announced that the at-the-market offering was over, the stock shot up. And I was trying to hammer that point home today that, hey, this is happening. Don't just call it FUD. The FUD in this scenario was the fact of some of the headlines saying how negative this is and once again referring to us as dumb money and not knowing what's going on. It was more of the connotation behind it because at the end of, let me explain where we're going with it, but I really do think that this was a positive thing. Yes, there was dilution today. And guess what? At 1 p.m. Eastern, they announced that it was over. And look at that. We had a breakout from 50 all the way up to 68.80. We saw it in GameStop, AMC previously, and then again today. This is how these things go. When they announce that they're going to do an offering, there's some bearishness. And then when they announce that it's over, it basically just rips right back up to where it was originally. So that's what was going on. And right here we have, this was around one. AMC Entertainment completes 11.5 million share at the market equity offering, raising 587 million in additional equity capital. So right here, I just wanted to bring this up. So this is from Adam Aron himself. Bringing in an additional 587 million of new equity on top of the 658 million already raised in this quarter results in a total equity raise in the second quarter of $1.25 billion, substantially strengthening and improving AMC's balance sheet, providing valuable flexibility to respond to potential challenges and capitalize on attractive opportunities in the future. So right there, there's a couple of things going on with AMC. We need to talk first about just the chart. As we're about to see, AMC's chart has been going sky high. That's putting a lot of pressure on the shorts. The fact that there's still high short interest means as we continue to go higher, there's more and more of a likelihood of a short squeeze. And the final piece, like one of the main things people argue against AMC is its fundamental value. Like what's going on? Obviously, it took a very big hit in 2020 just as a business. So right here, this is them improving the fundamental nature of the company, which is attractive to not only your long-term investors, but considerably well-funded long-term investors. So right there, we have it. They raise money, they improve their fundamental position. They can pay off debt. They can acquire other movie theaters to improve their market share. Right here, this money, the 11.5 million raised at an incredibly high stock price, got them a lot of money, and it improves the business at its core. So right there, that's why I think this is a big brain move on Adam Aron's part. So with all that being said, now let's hop into some of AMC's actual data and the trends of what's going on. So today there was a net return of 2.2 million shares, which means that if you do the math here, we're around 137 million shares on loan, which is still a considerable magnitude. The utilization is around 98, 99%, still almost at its max value of 99. The current estimated short interest based on the free float is 17.6%. And finally, let's look at the days to cover. Based on the average daily trading volume over the past 2 weeks, we are around 0.29. I was getting a couple questions on DTC today. Remember, that's just a theoretical number of basically, they look at how many shorts there are, they look at some average volume, and if all the shorts wanted to cover at once, which never really happens in reality, how quickly could they possibly get out? That is what DTC tells you. So that's what's going on with AMC. So overall, yes, the short interest is still very high. There are still many, many shares on loan, a considerable amount. And as soon as the stock continues upward, that's going to put more and more pressure on these people. So I know today was not the best day with AMC. I'm not oblivious to that fact. We closed out at 51.34, which was a drop of almost 18%. But when in doubt, zoom out. Look at this. Yesterday, there was a gain of 96%. Do you think after a gain of 96%, it's acceptable to give back 18%? Or from last Monday until yesterday, we were up 419%. So to gain 419%, to then just give up 18%, in my book, that's okay. That's a healthy check. I mean, even from last Monday till now, we were still 325%. That is absolutely incredible. Stocks don't simply go up. I know we want it to work that day, but this is perfectly fine. Seriously, we have been on such an absolute rip that this is a healthy check. We're shaking out some of those weak hands, and then we just continue our trip higher. And now that they have fundamentally improved the business by raising more than $500 million, and we have some announcements coming out later today, this evening on June 3rd, from Adam Aron himself to figure out kind of what's going on, I'm expecting some bombshell announcements that truly get investors and traders excited. I'm very excited to see how this gaps up in the morning and then where we go from there. But insanely bullish on how this is going to play out to close out the week tomorrow in terms of AMC. Now let's switch gears over to GME. First, while that's loading, let's talk a little bit about its own data. So today, the shares on loan was 14.26 million. There was a net borrow, pretty much net neutral. The estimated short interest just below 20%, 19.8, utilization 58%, and its days to cover is actually over one full trading day based on the same average volume over the past 2 weeks. For GME, Another pretty strong day. So a lot of these highly shorted stocks, the way GME, when it was moving in late January, a lot of these other highly shorted stocks were moving in more of a sympathy manner. I think that's kind of what's going on with now AMC kind of being the top dog leading the way. So with that, we had that. I mean, obviously AMC didn't have the most exciting day, but I think that's why we saw a little bit of negativity in GME, Kohrs, BB, those related ones. But overall, those in my book are all still very, very strong. We're hanging out right around this 260 breakout level. I'm looking for it to break out and hold above 283, and then from there, 300, 320. No matter what's going on, I still think GME GameStop is a seriously strong contender. And if things play out the way I think they're going to with AMC tomorrow, I'm expecting a lot of bullishness in GME. In terms of support, I believe that 232 and 220 would be pretty solid dip buys, at least in my personal opinion. Also, don't forget that next week it does have an earnings announcement. This is saying June 8th. I thought it was June 9th, so I'll have to double check that. But it is coming out next week. Don't forget about that with GME, because you never know what's going to be like announced, or you don't know if expectations are going to be exceeded or not exceeded. So that is just a fundamental driver, and I bet there's going to be a considerable stock price reaction to whatever is said at that earnings announcement. Once again, that is next week. So overall, to wrap this up, clearly I understand it wasn't, in terms of its percentage gain, the best one day for either of these stocks. But if you zoom out on a bigger time frame, we are still looking phenomenally strong. I cannot stress that enough. Look at how far we've come. It's okay to rip for multiple days in a row and to take a one-day breather. And specific to AMC, I'm pretty excited to find out what Adam Aron's going to be saying later today, just because I think it could be a big catalyst for the stock. With all of that being said, I would love to get your thoughts on both AMC and GME in a comment below. If you enjoyed this video and you want to help with getting it in front of other people, don't forget to hit that like button. And if you want to be a member of the Moon Gang, where we talk about stocks, options, and crypto, all you have to do is hit that subscribe button. If you don't want to miss any of the new pieces of content, just hit the bell icon, click on it, and switch it to always, and you should be notified whenever I put out any piece of new content, new video, anything like that. But until I catch you next time, from me and Chair, best of luck in the markets.